This lecture is on personal lines insurance policies. A personal lines insurance policy is one which deals with non-commercial risks. Naturally, you will expect that this type of insurance coverage seeks to protect an individual. It is usually quite straightforward to transact and to buy this kind of insurance. In fact, this type of product may be bought electronically via an electronic medium such as the internet or via an ATM. Examples of personal lines insurance include household and travel insurance policies. These two insurance policies will be discussed in more detail during this presentation. Let us start with household insurance. A household insurance policy basically covers buildings, contents, and liability. The basis of settlement which a proposer can select is either on an indemnity basis or on a new for all basis. Let us start discussing buildings insurance. Buildings refer to what is left behind when one moves house. That means the actual dwelling place with its fixtures and fittings and any other additional buildings like garages, sheds, swimming pools, courts, greenhouses, and other outbuildings. There are a number of perils that a household insurance buildings policy will be covered against. These are a few. This slide displays some other perils. Note that the two types of cover under the slide refer to accidental damage, which means that anything accidental not restricted to the mentioned perils, damaging drains, pipes, cables, or glass or sanitary fixtures will be covered if such loss was caused by an accidental cause. A household insurance buildings policy will also include legal costs, expenses, architect's fees, surveyor costs, and debris removal costs following a loss. Typically, a household buildings insurance policy will also include loss of rent. This is, of course, applicable if the landlord loses rental income as a result of the household being damaged or destroyed by an insured peril. A proposer can opt to buy an accidental damage building insurance policy as opposed to one based on specific perils. On the other hand, a household insurance contents policy will insure all household goods and personal effects belonging to the insured and members of the family residing with the insured. This type of policy, the contents insurance policy, differs from a buildings policy in that no excess applies to storm, flood, or escape of water causes. Furthermore, theft requires forcible entry into the building, and there is limited all risks cover to certain items and personal effects. Furthermore, contents are insured subject to a limit. One item must not exceed 5% of the total content, and with respect to valuables, all valuables insured under this section must not exceed 1/3 of the total sum insured. These are some extensions under household contents insurance. These extensions are usually given for free under the policy. These type of extensions are non-automatic, which means that the proposer will be charged extra premium if such extensions are sought. Exclusions. Under a household policy, items which are more specifically insured are excluded under this policy. Typically, these will include motor vehicles, livestock, caravans, and goods in transit. Furthermore, documents, securities, medals, and coins are usually excluded. If these form part of a collection, they will have to be insured separately. There is a legal liability section under a buildings and contents insurance policy. The legal liability under the buildings section applies to cover the policyholder as an owner and as the person responsible under the Act. Under the content section, the legal liability section will cover the policyholder as an occupier rather than an owner, in which case legal liability for any loss or damage caused by the occupier would be covered. Furthermore, this section also provides legal liability to the policyholder in his or her personal capacity as a private individual. Furthermore, the legal liability section under this policy will cover the policyholder as an employer if a domestic servant is employed. These are typical optional extensions which may be bought at an additional premium under a household insurance policy. Let us move on to travel insurance. The typical rating factors under travel insurance include the age of the proposer, the area traveling to, the length of stay, and whether the proposer will be taking part in winter sports. All these will have a bearing on the insurability and the amount of premium to be charged. A standard travel insurance policy will usually cover personal accidents, medical expenses, loss of deposits for which a refund is not available, baggage personal effects and money, personal legal liability, delayed baggage, compensation for hospital stays, better known as hospital cash benefits, travel interruption, and travel delay. Furthermore, a travel insurance policy may be extended to cover the policyholder in the event of a tour organizer failing to organize the travel tour as contracted, or compensating the insured if he or she finds that services or amenities have been disrupted or following the loss of passport or the provision of legal expenses to sue or defend a case connected with the journey of the insured. In travel insurance, the typical exclusions would be suicide, self-inflicted injury, or insanity. All these will have an effect on the sections related to death and bodily injury. With respect to the property sections of a travel policy, confiscation of items, documents, or fragile objects will also be excluded.